You need to know about this next section because you're going to have clients that are going to have capital losses, or for that matter, business losses that they're going to be carrying back that's going to result in a repayment of the refundable dividend tax on hand that they got when they paid dividends. And oh, there's something you need to know about interest charged by CRA and paid by CRA. Hugh Nielsen, tell us what we need to know so we can tell our clients.
Given the economic conditions over the past few years, we're seeing an awful lot of clients, corporate and otherwise, realizing on their capital losses or planning to realize on those losses. Very commonly, our planning in that situation is to carry the loss back, offset some capital gains from prior years, and hopefully get a big tax refund for our client. CRA has thrown us a bit of a curveball recently in reassessing corporate tax returns for losses carried back. They have determined that they should apply arrears interest on the dividend refund we may have received when we paid out dividends on realizing those capital gains from the date that the taxes were actually due, or if it's a later date, from the date that they sent the dividend refund out to our client. In many cases, we do pay those dividends out to get our dividend refund only because it is cheaper to pay the personal tax than it is to leave the refundable tax within the corporation. What they're now doing, however, is charging us for the dividend refund at the date that our balance was due and not offsetting that for the corporate tax refund until the actual return has been filed requesting the loss carry back. So there can be a significant gap. As an example, if we had a holding company that realized capital losses of $100,000 in its December 31st, 2010 fiscal year end, and carried those back to happier investment times in 2007 when they received lots of capital gains, they're going to discover that based on Ontario tax rates, for example, they might have had federal taxes of $17,895. They got a dividend refund of $13,335. And as a result, CRA is going to charge them arrears interest on that over $13,000, probably from March 31st, 2008, when their taxes were due, perhaps February, if that was when their taxes were due because they didn't qualify for a one-month extension. They're not going to credit them for the recovery of taxes, including that refundable tax of $17,895, until they receive the loss carryback request. So that might be March of 2011. That leaves a 3-year spread where we're paying interest on the vast majority of that corporate tax. If we calculate out some interest numbers, that's about $2,500 of arrears interest accumulated in the intervening period, which offsets a pretty big chunk of the expected $4,500 tax recovery, certainly well over half. They are still going to get a tax recovery for provincial taxes, depending on the province they were operating in, but that's a significant bite into the potential tax recovery. We might want to consider the alternative of carrying that loss forward to offset future capital gains. In addition to avoiding this arrears interest cost, that has the added advantage that it's going to offset the refundable dividend tax from the outset, and as a result, we might be able to reduce the dividends we would otherwise pay to our client, particularly if we're only paying that dividend to get refundable dividend tax back, and the client doesn't otherwise require the funds for personal spending. Now that's focuses mainly on capital losses, but don't forget that this would also apply if you're carrying a loss back that offsets investment income that generated refundable tax, which was recovered by paying a dividend. Again, you may find that a lot of that ultimate refund is offset by the cost of arrears interest under CRA's new policy. Unfortunately, although the result seems quite unfair, CRA's assessing approach is technically correct under the legislation, and we have heard some anecdotal evidence of practitioners and taxpayers who've complained about this result. CRA's recommendation to them has been that they can always write back and request that they not apply the loss and carry it forward instead. So we're not seeing a lot of sympathy from CRA. Certainly something to think about and possibly discuss with our clients before we carry back capital losses.